Welcome to Crypto Intuition. I would like to begin by saying that I'm not a financial advisor. Anything I say should not be mistaken for financial advice. This is for entertainment purposes only. A Bank of England official, John Cunliffe, has warned the world that cryptocurrency could potentially cause a meltdown. The urgency of the world to regulate cryptocurrency is due to its highly financial instability, and it could spark a financial crisis unless tough regulations are introduced. It is quite a bold move to actually compare the astonishing growth of cryptocurrency to the 2008 subprime mortgage crisis. He said, when something in the financial system is growing very fast, and growing in a largely unregulated space, financial authorities have to sit up and take notice. He quickly contends that officials must be careful about simply classifying these new assets as dangerous, because crypto technologies may offer radical improvements in the financial services. Financial stability risks from crypto are low for now, but pose a big problem because a majority of these assets, he contends, don't have intrinsic value and are vulnerable to major price corrections. Is it a good improvement or bad improvement? That's the question. Bitcoin and Ethereum plunged over 30% in value earlier this year before recovering. It is only proof that this volatility is not healthy because it is prone to triggers from comments from Elon Musk, for example, to regulatory crackdowns in China. He is definitely correct about that one. The crypto market is creeping up on the financial traditional space, which may cause a disturbance in the financial system itself. When something is unregulated, it is only logical to actually conclude this, because when something is not regulated to the point that checkpoints can't be checked or marked, it does create a certain, uneasiness. The financial system, Cunliffe argues, is becoming more complex. If you have an asset, for example, falling 10% in a single day on almost 30 occasions in the last 5 years, the forward-looking question is what could result from such events if these crypto assets continue to grow at scale, if they continue to become more integrated into the traditional financial sector, and if investment strategies continue to become more complex, Cunliffe said. When investors absorb the losses without a direct impact on the economy, the real economy, it could be fatal to the actual economy, making it plausible to compare it to the 2008 subprime mortgage crisis. If you haven't heard about Anchor, it's the easiest way to make a podcast. Let me explain. It's free. There are creation tools that allow you to record and edit your podcast right from your phone or computer. Anchor will distribute your podcast for you so it can be heard on Spotify, Apple Podcasts, and many more. You can make money from your podcast with no minimum listenership. It's everything you need to make a podcast in one place. Download the free Anchor app or go to anchor.fm to get started. Cunliffe calls it the knock-on effects. I believe what he means by this is when it is hidden, there is an indirect impact on the economy. Investors feel the pain first, ultimately creeping into the real economy. I like to think of it as someone knocking on the door and keeps knocking, forcing one to answer the door. Cute concept, actually, but let's get real here. It would be a disaster, in my view, if there should be another financial crisis caused by leveraged plays, because it is too short of a span from 2008. We all remember 2008, and it echoed worldwide. If you really think about it, the growth of cryptocurrency is tremendous. It is unlike anything I've ever seen before in my lifetime. And if you have something this fast growing, it could tumble as quickly as you can say tomato. When it comes up, it must go down. But it depends on how fast it comes down. In 2008, it held on for the longest time until it eventually folded faster than you can say tomato. Surveys suggest that spending on cryptocurrency only amounts for $40 billion of borrowed funds, but that is not what is concerning. That is actually minuscule. Traders on the Chicago Mercantile Exchange, for example, are handling $2 billion of crypto purchases per day, resulting in interest from hedge funds and futures trading at a rapid pace. This kind of growth is unsustainable. We should not forget about the tulip. The tulip bubble happened a long time ago. To make a long story short, people bought something that they really never wanted and never really needed. The question of this magnitude is whether cryptocurrency is actually crucial to the improvements of financial system itself. If it is crucial to the financial system itself, it could have a great future. But if it proves to be not crucial to the financial system itself, it could actually drive the financial system to a downward path. I believe this is not going to happen. The cryptocurrency market will eventually just settle into a path of acceptance. This is not in any way to pounce on cryptocurrency. This is just a reminder of what could potentially result in such innovation. Sometimes innovation can be detrimental to the system at first. Sometimes what we think and view as good can actually be bad, and I believe maybe that could be the case for cryptocurrency. It could be detrimental to the system itself in the beginning, but as it gains traction, it proves the system overall. It may not be impossible to conclude that there could potentially be a financial crisis caused by the overwhelming growth of crypto, but that doesn't mean it won't eventually settle. When you have something new introduced to something old, it could not be envisioned right away that it could actually be good, because the old system sees it as a threat. Regulation of cryptocurrencies is actually good. It's actually good for the crypto market as a whole, because it underlines what is and what is not. For example, what is cryptocurrency? If cryptocurrency is just directly an asset or even considered as cash, then that is what it is. Now, if you don't have a direct definition of what cryptocurrency is, for example, and how to protect investors, well, things can get a little messy. And when you don't have a defined definition of something, in the real world, things can get hazy. Thank you for listening to Crypto Intuition, the only on-the-go podcast that has info, insight, and analysis all in one. All that in under 8 minutes or less. Google Crypto Intuition or go to anchor.fm/cryptointuition. Make sure you listen to my previous episodes. Till next time.